God-given right to our production as an income, savings, and investments. And the original Constitution protected us from direct taxation. All was well until the 16th Amendment. This started a tremendous change in our country. It was passed in February of 1913. The 16th Amendment is a short amendment. Basically, it enabled the direct taxation of we the people without limits. Therein, the government gained huge new taxing powers over us, and we lost freedom, liberty, and civil rights. The 16th Amendment enabled the first legal income tax. It enabled the IRS to form and grow. It enabled payroll taxes, Social Security and Medicare taxes. It enabled them to be taken directly out of our income, as in tax withholding. Government gained huge new taxing powers, and we lost freedom, liberty, and civil rights. Oh, I'm going backwards, I'm sorry. The 16th Amendment also enabled the income tax as a progressive graduated tax. This type of tax is the second requirement for a communist state as defined in the Communist Manifesto by Karl Marx. Now think about it. We have changed our Constitution, our original Constitution, to meet the second requirement for a communist state. With that change, after 102 years, the tax code has become a cancer. The non-medical definition of a cancer is a deadly, spreading evil. What are some of the problems and issues that have evolved over the years? Let's take a look at some of them. First of all, the IRS is going to be a tyrannical organization. We joke about it, that who does not fear an audit? Who does not fear the IRS? The tax code has grown to over 73,000 pages. It's no longer understandable. It's too large to administrate, and the IRS is now used for political gains in the public place. Another problem is this direct taxation and the annual income tax filing. How would you like to eliminate that issue? We keep screaming for jobs and economic stimulus. Let's get our economy growing and working again. This is a big problem. How would you like a solution without government spending and without new government debt? Our present tax code punishes good behavior with taxes on production. The more you earn, the more you produce, the more income tax you pay. It punishes income, savings, and investments. All these are required to build wealth at the individual level as well as the whole country. How would you like to get an increase in your take-home pay? An easy way would be to just end the tax withholding. The FICA tax is 7.65% of the income, and you add on top of that the income tax withholding. That in itself would be a huge increase in everybody's take-home pay. United we stand, divided we fall. But our tax code divides us into classes. How would you like to end this practice? We pay some $430 billion a year to comply with our tax code. That involves all the accounting work and the records keeping and the income tax filing and collecting. That is a huge amount of money that we pay to just collect and pay our taxes. How would you like to put on an even playing field the taxation of imported goods and U.S. goods? Right now, the goods made in the USA carry a heavy tax burden, whereas the products that are imported to our country are free of that tax burden. How about untaxing all of us up to our subsistence level of expending? In other words, let's put the care and feeding of the family before paying taxes. Which do you put first in your priority list? Paying taxes or the care and feeding of the family? We do show companion for the poor and the lower economic levels of our country, but we can do more. And to help them most would be jobs creation and a monthly tax refund to untax them up to their subsistence level. The underground economy, there are many people working in our economy that go tax-free, and that's estimated to be between $1 and $2 trillion. What we're talking about here are the drug dealers, the illegitimate businesses, the prostitutes, the under the tax code operators, the illegal immigrants. All these people are going tax-free in our present economy. And what about greatly reducing the cheating? How can we do that? Are there some ways to reduce the cheating and the non-filing of our present tax code? Do you like to be deceived? So 47% of the population think they're not paying any income tax now. They're not paying any taxes. Well, they may not be paying any income tax, but they're paying some 22 cents per dollar in hidden taxes every time they buy a new good or service. You see, what's going on is businesses don't pay taxes. They collect them from the next buyer. It goes down to the final consumer in the form of higher prices. So we, the people, end up paying all these business taxes in the form of higher prices. Would you like to eliminate that whole process? In our present tax code, it punishes jobs and businesses and capital and drives them out of our economy. And at the same time, discourages new businesses and jobs and capital to come into our country. Let's change the tax code to stop this bad practice. And what about greatly reducing the power of the politicians, the lobbyists, and the special interest groups that are now buying and selling our tax code to their benefits? You think that we'd get a different kind of politician if we had a different kind of tax code? We've talked about 15 different problems. Which ones are on your list? And let's remember the choices we make at the individual level as well as at the city, the state, and the national level affect all of us. So what choices would you like to make? Which problems would you like to solve? Well, I suggest let's solve all of them. And that solution is not going to come from the Beltway. The politicians and the lobbyists are not going to come up with a solution. The flat tax on income is not the solution, as it still needs the 16th Amendment, the IRS, direct taxation, payroll taxes, and tax withholding. Well, what is the solution? A group of businessmen challenged them to come up with this answer. And they invested some $22 million in private funds to do study and research. They employed some high-level economists and think tanks and did the research and the basic studies and they came up with a solution. The solution is moving the tax base from income, savings, and investments, and moving that tax base to a broader, more stable base on consumption. The solution is called the FairTax, and it is a bill in Congress, H.R. 25 in the House and S. 155 in the Senate. It's one tax, a one-tax system with a progressive sales tax on all new goods and services and not on used goods and services. The fair tax is one tax on all new goods and services at 23 cents per dollar. That equates to 23 cents inclusive or 30% exclusive. It's only a 131-page bill that replaces some 74,000 pages of tax code and regulations. That 131 pages, by the way, is double-spaced. It's very easy to find at the FairTax website or just do a search on the internet. But the bill eliminates the income and the payroll tax and the withholding of those taxes. It adds a monthly tax refund called a prebate. It will eliminate some 22 cents per dollar of hidden embedded taxes, disposable income taxes, disposable income increases, and the systems and processes are now in place with the states collecting the sales tax and Social Security managing the prebate. The fair tax will untax legal residents up to the subsistence level with a monthly tax rebate or refund called a prebate, as it is received the first of each month. There are a couple examples of what the prebate amount is, and it is based upon subsistence level of spending as now figured every year by the Department of Health and Human Services. The first example, for a family of 2 adults and 2 children, the Department of Health and Human Services figures that that family unit spends $31,860 a year in necessity level buying. Multiplying that by 23% gives you a prebate of $7,328 to untax that family up to their subsistence level of expenditures. That annual prebate equates to $611 per month. Another example, take a senior citizens, empty nesters, 2 adults, or a younger family just starting out with no children. Their average spending would be to subsist $23,540, with the monthly prebate being $451. A single adult, they would get a monthly prebate of $228 to untax their necessity level spending of $11,770. The prebate is a progressive tax system. I'm sorry, the fair tax is a progressive tax system. It is a sales consumption tax, but there are 2 parts to it. That second part is the prebate. And that second part does a number of very important things, one of which is making the fair tax a progressive tax system, as is shown in this table. It's, again, for a family of just 2 adults and 2 children, showing as they spend more, they pay more tax, but at a higher tax rate. For example, if a family can live on $25,000 of spending, their prebate will be more than the actual taxes fair tax they pay at the retail counter. So they have an effective tax rate of, they're making money on the deal, in so many words, until they spend over $31,000 a year. At that point, it's a break even. But let's say that family can afford to spend $45,000 a year to maintain their standard of living. Well, they would then be paying a fair tax of $10,350, which is more than the prebate. So they now have an effective tax rate of 6.9%. Let's say they're doing better, they have better jobs, or they both work, whatever, and they're earning $75,000 a year. They're now spending, I mean, they can afford to spend $75,000 a year. Their fair tax would then go up to $70,250. When you back out the monthly prebate, that gives them an effective tax rate of 13.4%. And as you can see, as that family unit can afford to spend more, they pay more tax and they pay at a higher tax rate. So the question to ask is, when somebody asks you, well, what is the tax rate for the fair tax? The best reply is, you know, how much do you want to spend, or how much do you plan to spend? Because with the fair tax, you have control over how much tax you pay and what your effective tax rate is. Another point to be made is that we look for jobs and stimulus. We want to get out of this no-growth era that we're in. The fair tax is a tremendous jobs and stimulus program. First of all, it will eliminate these 22 cents per dollar of hidden business taxes. When you eliminate those business taxes, the costs of goods go down. That makes the U.S. goods and services more competitively priced, so the world demand for goods goes up. The USA now becomes a tax-free business haven because we've eliminated this funny business of taxing businesses, so they pass those taxes on to we the people in the form of hidden taxes. So the USA becomes a tax-free business haven. Some $10 trillion of offshore capital comes flowing into our economy. You've probably heard about in the last year, Apple Computer was called into Congress. They wanted to know why they weren't paying more business taxes, why they weren't bringing their capital back to the U.S. Well, the simple answer was, your tax code discourages us from doing that. The fair tax is a solution to that whole issue. With that, we get a huge increase in jobs and economic growth just by changing the tax code to the fair tax. When they did this study, and there's some $22 million investment of research funds, they projected out what the results might be for the next 10 years. And all the major metrics, gross domestic product, employment, domestic investments, consumption, they all show nice increases from year 1 all the way out to the end of the study in year 10. There's much to like about the fair tax. It is a nonpartisan issue. We don't support any political parties or candidates. We look for them to support the fair tax. There's much to like for everybody in terms of it being a unifier for the whole country to bring us all together again as one united workforce. That completes the presentation up to the special question, the special issue time. I'd like to stop at this point to see if there are any questions. Larry, do you see any questions? Oh, wait a minute.
Yes, I do, Paul. Okay,
Yeah, I see one. Okay, Jack Sink, are you on? I think no.
the question mark box, Paul.
Oh, okay, I got it. Okay. Gary. Gary asked the question of why not add 2 or 3 cents and abolish all taxes, not just income. I don't. Larry, do you have a thought on that
Yeah,
question?
I would have a question for you, Gary. Is from what source do you find that another 2 or 3 cents would be enough to eliminate all of the other taxes that are being levied against us? I think it might take a lot more than that, although I don't have any source to uh, support that either. But here's the real answer. The fair tax was designed to be a replacement for the income tax for drawing the majority of the income that the government needs. It did not address excise taxes, which are legitimate taxes under the Constitution. A sales tax falls under the definition of an excise tax, by the way. So in keeping with the Constitution and in keeping with just trying to get rid of this abomination of an income tax system which has credits and loopholes bought and sold, the fair tax addresses just that issue and nothing more. If you can come up with some way to eliminate other taxes, it's only going to be done at the expense of a higher sales tax rate, because there's just a certain amount of dollars minimum that our government could operate under and maintain the services that are required. The services being primarily our defense system, secondarily the entitlements that have been established a long time ago, which cannot just be stopped overnight. At best, they could be maybe reduced over some long number of years, giving those who are looking forward to the reduced entitlement the opportunity to find other means of saving for their ultimate retirement. I hope that answers your question, although I'm sure it's not the answer you wanted, Gary, but that's the best one we have for you. And thanks for participating.
Larry, let me add a little more. First of all, the fair tax eliminates not only the income tax for businesses and individuals, but eliminates the Social Security and Medicare taxes for both businesses and individuals. It eliminates the self-employment taxes, estate taxes, capital gains tax, and these are all federal taxes. The fair tax is a federal tax subject and issue. It does not address state and local taxes such as property taxes and all kinds of other taxes that are imposed upon us. That might be part of what Gary was thinking about.
That could be.
Abolishing all taxes. Okay. Let's see. John has a question. How do we convince our federal representatives to pass the fair tax? How do we overcome their reluctance because it feels their power over ever changing the tax code? John, the answer to that question is to, in part, join the fair tax cause. We are organized we have to organize as voters to convince our representatives that The fair tax is the right thing to do for our country, and we can only do that at the ballot box. Every 2 years, the representatives come up for re-election. We need strong fair tax organization in every congressional district in the United States to convince their representative to become a fair tax co-sponsor. Right now, we have in the House 69 co-sponsors for the fair tax bill. In the Senate, we have 6. In both the House and the Senate, we have a sponsor for the bill. So in total, that gives us a 77 elected officials in Congress that are in support of the fair tax bill. The Fair Tax Organization, Americans for Fair Taxation, is organized to build a strong organization throughout the country. I'm not sure where you are, but if you're not a member of the Fair Tax Now, I encourage you to find an organization to join or start one yourself, because this is a cause that we have to join as concerned voters to get the job done. I hope that answered your question. Let's see. Dave has a question, or maybe it's a comment. Let's see. Fair tax replaces Social Security and Medicare. I can't talk. Social Security and Medicare taxes with a more stable funded source for those 2 programs. It does not eliminate the programs. It's important to point this out, as Dave has written to us. It is very true. The fair tax does not address or change Social Security in any way. It puts those 2 programs on a larger or more stable funding program. Thanks, Dave, for that input. Peter, are you on?
Yes, I am.
Now, Peter.
Hey, you got more questions. You got more questions there.
What is your question?
Oh.
Yes. Okay, well, Peter's got a question. Respond to Forbes issue 23% is big enough to avoid for those who are well heeled. First of all, the 23% is the maximum, and if that well-heeled person decides to save their money versus spend it, that's one way to avoid it. But if they do that, that capital is then in our economy for others to borrow and put to work. Remember, for you to become wealthy, there's only one way to become wealthy, and that is to save more than you produce. Our present tax code punishes savings. Larry, do you have any other thoughts? I think he might be danced around the question that might be on his mind are tax cheating again by trying to avoid the fair tax by maybe buying through their company and things like that. Going across the border to Canada or Mexico to buy their product. The fair tax, just like all taxes now, has laws against cheating and taking advantage of the law or trying to take advantage of the law. So those loopholes are covered in the fair tax bill. Now, if you actually cheat, the likelihood of you getting caught is much higher. I say that because the collection points for the fair tax is greatly reduced. Right now, we have over 160 million annual filers. The fair tax reduces the collection points to some 20 million retail outlets, many of which are the very large outlets when you take into account how much retail business is actually done through, the Walmarts and the Targets and the big box stores and all the big food chains and so on. That is a very large percentage of our total expenditures in retail goods and services. So I hope that covered Peter's question. Dave, Ramsey, would state income taxes go away? What the states do is up to the states to determine. However, with the federal, right now the state income taxes tend to piggyback on the federal income taxes. In other words, you pay some portion of your state income tax is based upon some portion of your federal income tax. That's the starting point anyway. So the states could continue to try to collect a state income tax if they so desire. For those of us living in Florida, we don't have that problem. And I believe, what is it, 46 states, I believe it is, do have a state income tax in some form. So they would have to make some changes in their tax code. I hope that covered that question, David. John, are you on? Okay.
Hey, Paul,
Yes.
you're clicking on the microphone, unmuting the microphone. They don't have a microphone question. They have a written question.
Okay.
The question mark is what you want.
Okay. Well, I think I've covered all the question marks.
No, there's more.
Well, so I have failed to take some of them into the delete them. Well, Gary has another question. I think what I was getting at was for the people to know their actual tax rate. Under the fair tax, well, I'm not sure if you're talking about your tax rate now, which who knows what it is and how you can figure that out. Particularly, most people don't take into consideration the embedded taxes, all the embedded taxes they're paying. But with the fair tax, when you make a purchase, you are on that sales receipt. It shows how much fair tax you are paying. And that will be at the rate of 23 cents per dollar. So for the individual or the family to figure out what their effective tax rate is, or their actual tax rate, they're going to have to figure out how much spending they do per year on new goods and services and then back out the rebate to find out what their effective actual tax rate is. But with the elimination of tax withholding and the addition of the rebate, there'll be plenty of money in the disposable income column to cover that tax rate.
Paul, let me add, insofar as your income goes, since workers will be taking home their full paycheck, the average worker in the country today is in the 15% tax bracket. Those people will realize an increase in take-home dollars of 29%. That's because they don't have any FICA withholding any longer and no more withholding tax, federal withholding tax any longer. So they'll take all of that home. Secondly, is if they were to spend, as Paul showed in one of his charts, twice the poverty level or the subsistence level for their family size, regardless of what their size is, if they were to spend twice that amount, okay, they would have an effective tax rate of only 11.5%. So the tax rate is fixed for everyone at 23 cents out of the dollar, but the effective tax rate, which is what Paul pointed out, that's the important question. What is my effective tax rate? It's going to depend on your spending. And if you happen to be shopping a little wiser and maybe buying used goods, whether it be clothing, appliances, cars, house, if you're buying used, there is no fair tax on those items. So you can spend the money you have and not be spending, not be getting taxed on it. I hope that clears that up a little bit, Gary.
Okay, thank you, Larry. Rick has another question. Would the fair tax replace federal gasoline and fuel taxes?
Is that an income tax, Gary? Rick, I'm sorry. Is a gasoline tax an income tax? It's not.
No.
You don't have a microphone, so you can't answer. I'm sorry. It is not an income tax. It is one of the excise taxes that's within the system, within the Internal Revenue Code. The fair tax literally deletes sections A, B, and C of the Income Tax Code of 1968, but everything else that's in there, which is legal under the Constitution, will stay in place. So the short answer is no. I gave you the long answer first, and thanks for sticking with us, Gary. Or Rick, I'm sorry. Okay, Paul.
Okay, that, well, let me check. Okay.
All right, there's one more question, but that can wait until after you.
Oh, no, John's got another question. Are the fair tax slides used in this webinar available to us online? If so, can you provide the web address? This is not the official, we don't have an official set of slides. You're welcome to contact me, John. Let me give you my email address to talk about this subject in greater detail. You can just email me at Paul for, and that's F-O-R, fairtax@yahoo.com. I appreciate your interest and look forward to getting to know you better.
I'll twist his arm, and John and Paul will send you a file of his slides.
Okay.
All right, move on.
Okay, well, we've covered the questions. Now let's get to the special section. I can't advance the first screen for some reason. Larry?
You might have to click on your slide in order for the advanced button to work.
Okay. The special subject tonight is static versus dynamic scoring. And this is an important subject. Every tax bill gets scored by the Congressional Budget Office and the Joint Committee on Taxation. And the scoring is to show the policymakers the economic and revenue impacts that are due to tax policy changes. And the method that has been used is called a static scoring system. And the static system assumes that taxes do not affect economic behavior and excludes consumer behavior. And you think about it, that taxes affect our behavior all the time. And also taxes affect changes in our economic growth. You've heard that this statement, perhaps if you want less of something, you tax it. You want more of something, you untax it or subsidize it. And the static scoring system ignores that whole issue. And so with the static scoring system, we've got, we make tax changes that do affect our behavior, but the scoring system doesn't take them into consideration. And it prohibits potential economic growth, and it's giving the policymakers, our representatives and senators, poor information to work with. And it's a relic of outdated economic theory. Well, there is another scoring system that's called a dynamic system, and that recognizes that as you change the tax code, people's behavior does change as well, and it takes into account economic realities. It puts us, we the consumer, at the heart of analysis, and it provides more meaningful data for the legislature to consider in evaluating tax changes. The good news is that the new chairman of the Ways and Means Committee, Paul Ryan, has put into effect both the dynamic and static scoring systems to be done on all future tax proposals of over $40 billion. And this is a very positive change for the Fair Tax Bill. And it scores okay with the static system, but with a dynamic system, it does much, much better. Just think about it. With more money for businesses and individuals in their pockets, there will be a huge stimulus to the economy in many different ways. And it can result in a much better tax policy if the politicians take into account the dynamic scores of these new tax bills. So this is a very encouraging turn of events for the fair tax, as well as our whole country in total, of getting better tax legislation. With that, I want to stop and see if there are any new questions or.
Okay, I don't see anything on there either at the moment, Paul, and maybe they haven't had a moment to type it in since this topic was kind of short.
Yeah.
So something I will take an opportunity to point out to you guys, since you've invested your time here this evening. Paul mentioned it also, but I mentioned this in another way. One of the things the income tax causes is corporations and wealthy individuals to invest their money offshore. And he mentioned Apple. They have $60 billion in profits from offshore operations, and they just flat told the U.S. government, as Paul had noted, we're not going to bring this money into the country until you change the tax code. It's too punishing. And we've seen companies move out. The most recent was Burger King. They call it inversion. When a company like Burger King merges or purchases another company, and they call it a merger, they merge the two operations, and then they moved their headquarters into, in this case, Canada. Why did they do that? They do that to avoid a few percentage points that they are being taxed under the American income tax system. Some people think the flat tax is a great idea. Oh, let's have a 17% flat tax. Well, I used to think it was a good idea, to be honest with you. But if you're knowing now what I know, and that's through just experiencing what the government, our Congress, has done over the years, a flat tax system will never, ever stay flat. It won't be 6 months before there are some kind of changes, some kind of exception to the rule that benefits some that is paid for by the rest of us. And so the flat tax, as Paul had also noted, is not the answer. We have to get rid of all income taxes, get rid of the 16th Amendment, get rid of the IRS. And if anybody's in love with the IRS, you're probably an employee. I understand your position. I just don't agree with it, okay? So that was one thing I wanted to point out. And Paul, if you're watching for questions, I think they've had enough time. I don't, oh, there's one that just came in. You want to pick that one up, Paul?
For
From Rick?
some reason, I can't see it.
Will the fair tax truly eliminate the IRS is what he is asking. We'll start with that, just that portion. Rick, the legislation, HR 25, S 155, literally abolishes the Internal Revenue Service, and it does so by not funding it. It gives the IRS 3 years to close open prosecutions that they have for people who have been evading, not avoiding, but evading the tax system. And after that 3 years, there is no more money to support them. The fair tax legislation also creates a new sales tax department under the Department of Treasury, and they will be an overseer for the states who will be responsible for administering the collection and enforcing the sales tax, the fair tax in their states. They can do a much better job of enforcement and administration than the federal government can, because they have such a much smaller amount of people to work with. Also, they have other businesses which they're collecting taxes from, and so they know how their businesses are functioning and what kind of revenue a business has been reporting in the past. They should be reporting essentially the same amount of income, hopefully with some slight growth each year, and they should be collecting the fair tax on that amount. So that's the first part. Now, what about all of the Obamacare elements that justify the explosive growth of the IRS? Well, Obamacare is going to suffer a little bit because of the elimination of the IRS, because some of that code is eliminated. So we're not sure how that's going to be handled. We know there's going to be some large debates about it, but it, I am sure, will go hand in hand with the effort to repeal Obamacare and replace it with something that is more palatable, more fair to everyone, and better for job creation than what Obamacare is. Obamacare, as we understand it, is really not a healthy piece of legislation, and not if it requires 17,000 additional IRS agents. So that takes care of Obamacare, and that will stop the IRS growth machine. I hope that answers your question, Rick, and thanks again for your participation. Paul, back to you.
Larry, I don't see any other new questions.
Okay, I see one here from John. Do we have commitments from any of the current Republican presidential candidates in support of the fair tax? If so, who? Like Governor Huckabee? Well, yes, Governor Huckabee is a committed candidate to the fair tax. He is the only one. And it is up to us, the grassroots, to get on these guys and just be kind of firm with them that if they want your support, if they want your dollars, they're going to have to come out in support of eliminating the income tax system, eliminating the IRS, repealing the 16th Amendment, and implementing the fair tax. That's up to us. That's why we need your help, and that's why your activity is so important. And Paul mentioned that we need to get enough supporters in each of the 435 congressional districts. We really don't need that many, but we do need more than half. If we can get more than half of the not the Republican, but half of the congressional districts with 3,000 or more supporters, we've got it made. And so your job is to teach somebody else about the fair tax. Bring somebody else back to next month's webinar and learn more for yourself so that you can be a little bit of a better teacher than you might be tonight. We hope you learned something tonight, and I hope you'll forgive us for being a little bit clumsy here. Paul and I have not worked together on this before, and so we might be stepping on each other's toes a little bit as this goes back and forth. Give us a little leeway on that, guys. We're trying. We are in our 7th year, not Paul and I, but Mark and I. We are in our 7th year of doing these webinars, and so for him to go on to this point, we've been doing something right, and Paul and I will be better the next time around. I hope that answers your question, John. Go ahead, Paul.
Yeah, I did want to add Ted Cruz is a presidential candidate. He is a senator, and he is a fair tax co-sponsor. But he is not very actively speaking up for the fair tax like Governor Huckabee is.
Yeah, we've got to ask representatives like Senator Cruz a very important question. Senator Cruz, I know you're a co-sponsor of the Fair Tax Bill S-155, but why are you advocating for a flat tax? What is it you like so much about an income tax system that prevents you from advocating 100% for the fair tax, which is by far a better solution? And then let him stammer and stir a little bit and come up with an answer. I don't know what he'll do, but that's your job. If you're from Texas or any place in the country that Ted Cruz is visiting and speaking at, try and get in there and ask that question.
Yeah, another point that we should make is that your influence goes as far as the boundaries of your state, as far as senators go, and your congressional district boundaries as far as their U.S. representative goes. A senator or a representative in Ohio isn't going to pay any attention to somebody coming to them from Oklahoma or any place other than within their congressional district. They are interested in the thoughts and desires and voting tendencies of the constituents, their constituents only. And we have to recognize that as we move forward in this cause to get real replace and repeal tax reform. Another question that usually comes up is the repeal of the 16th Amendment. And so you understand, the fair tax bill has in it a sunset clause that, in so many words, reads that after the fair tax is passed and the 16th Amendment does not get repealed in 7 years, then the fair tax bill gets repealed. So in passage of the fair tax, it puts a lot of pressure to then get the 16th Amendment repealed. And if we, the people, don't appreciate and understand the many benefits and how much better off we are under the fair tax in 7 years, if we don't understand that to the degree that we cannot get the 16th Amendment repealed, then I guess maybe we deserve to get stuck with what we get stuck with. But I think that before we get near that line at all, we have a long ways to go yet. We're still in the educational and information stage. But this is an easy sale. When you talk to people about the fair tax, the minute they start to understand it, over 90% of them like the idea. They just like the idea. They love the idea. It's that the other 10%, you're always going to have some people that love government having all this power, and the socialists and the communists and the people that you can't see out of the box they're in, to not understand or not accept the fair tax. But this is the fair tax is such a beautiful program that it is going to get passed. It's just going to get passed. Larry, I don't have anything more to say. I don't think I see any more hands.
Okay, John has asked us, does the organization, FairTax organization, still have the bus, the FairTax bus? We have one locally in Florida, John, but I think you're thinking about the bus that was going around back during the 2008 campaigns, presidential campaigns. And no, that bus is no longer in service. That was a lease that FairTax made at that time, and when the campaign was over, we terminated that lease, of course. There was a lot of money spent on that. Rick, you're welcome. John, you're welcome too. Thanks, everybody. And I guess that'll do it, Paul. Thank you very much for your efforts